And we're live. Happy Monday, everybody. Got Steve here.
Cheers.
Everybody hear us okay?
Chat box.
And hey, I had some emails the other day about not being able to comment. You have to be subscribed to the YouTube channel to be able to comment, or that enables your comments. So if anybody's having issues commenting, make sure that you're subscribed and that you're logged into that account, because Chrome will, basically whatever account you're in, that's what you're streaming on.
Can they subscribe to the YouTube channel through this link, or do they have to?
If they came in through YouTube, if they came in through Facebook, they'll probably have to go to YouTube to do it.
So in other words, if you're watching this and you're not subscribed, go ahead and click the subscribe button. That would be like it, comment on it, give us a little action on the YouTube channel, and we'll that way you'll be able to talk or chat. I got a lot to say, so here in a second, I'm gonna get started.
Got a lot to say, huh?
I got a lot to say, man. The markets we have a tale of two markets right now. The growth stocks are getting hit, and the bank and the oil stocks are popping.
Tale of two markets. That's exciting.
Tale of two markets, right? So you got, I've talked about, and everybody's talked about kind of this inflationary type of market that we're in. And, what's interesting is because a lot of times when you think of, an inflationary environment, you want to go out and buy silver, gold, and all this other stuff that is supposed to be an inflation hedge. That's not always the case. And when you have inflation, it's not like the, oil right now, energy's popping really strong. They don't go straight up, and they don't make it easy for you. They're actually quite volatile. So I just want to talk about that. We'll look at the market. Then we'll look at, what is popping this morning to make sure you get a piece of it. You got to have a piece of it.
All right.
Are we good to go?
Yeah, let's get started.
All right. So let me start with the NASDAQ right here. Ben, can you hide our faces so I can blow this up a little bit? Okay. So I want to start with the NASDAQ right here. Let me update this. So last week I talked about this. I said, hey, when it was Monday, last week's show, I said, be careful when it comes up and it hits this pink line, and we'll see if it gets rejected, because the pink line is the 20-day exponential moving average. And sometimes it can slightly close above it and then just kind of roll over. And that's kind of what it's looking like right now. So just like you had over here, you have a really hard sell-off, and then it comes into the 20-day moving average, and then it gets hit down a second leg. I think that's what we're about to see right now. So you definitely have to be careful. I think growth stocks are going to come under pressure even more. If I just unless today really shows a nice reversal, positive, I think we could see some more downside pressure for some of these stocks, but not all is lost, because there's still plenty of, I think, opportunity out there. Let's look at the S&P 500 real quick. I'm sure the chart isn't that much different. And then I want to kind of get into the meat and potatoes. So right here you have, if I look at this right here, the S&P 500 completed a weekly reversal pattern. And that is bullish, right? Because you had a weekly reversal pattern right here, and sometimes you don't always get these sell-offs, obviously. You have a reversal right here. So this is a bullish pattern, right? The market sold off in the middle of the week, or at the beginning of the week, and then it closed up as a whole. Well, we're going to continue to wait and see how this develops. It doesn't mean the market is just going to V-shape right out of here. A lot of people think when you get that reversal, it's just going to go straight up like that, and that's not always the case. So you really have this V-shaped pattern. I think it's more likely to do something like this. So like I continue to say that just because the market is under pressure doesn't mean you go out and sell everything. You have a plan, a trade plan for each individual stock. Say if they break the 50-day moving average, you get out of that one. But last week I owned some stocks, and the market broke the 50-day moving average, but they didn't. So, and then the market bounced, and I participated in that. So it's important to not just go out and sell everything every time you get scared, because in a bull market, it's going to happen all the time. So right now we're looking at the major indices. In my opinion, they're looking just right for kind of another leg. Doesn't mean it's going to be the next March 2020 or anything like that. So we're always one day away from a bullish signal. And when you have a Monday where the market sells off in the morning, like the NASDAQ is selling off, it could bullishly reverse at the end of the day, just like it did on Friday. So just be flexible, but just pay attention to it day by day and be flexible, and don't always pay attention to where it starts, because to me that doesn't matter. It's where the market ends. And yes, late last week, you had several days where the market ended positively. I want to talk about energy right now. So I want to go to a commodities list to really show you a list of commodities. These are just ETFs, right? Just to go show you not all commodities are created equal. So you continue to have the last 2 weeks, in the last two top ETF videos I put out on Friday, energy has really dominated the list, just completely dominated the list. And if you have 1 week where energy is dominating, that's not a big deal. But when you have 2 weeks and then you have a bunch of good looking charts, it's really worth paying attention to. I mean, nat gas looks like it's almost going to the moon. And I talked about last week, like, hey, you have a breakout right here and then a retest, and then it just continued to pop. Look at the volume coming into this FCG. Look at the percentage gain. Like, the energy ETFs are up huge. I booked partial profits on, I think I told you, I hit my target this morning, my 8% target. So I booked partial profits on this one. And, I been talking about this one for 2 weeks. A lot of the energy ETFs look the same. Yes, they sold off on Monday with everything else, but now they're really, really bucking the trend. And commodities do have the potential. At the end of the day, the commodity stocks, right? They're still stocks. They can pull back with the overall market, but they do have the ability to buck the trend. But this is a bullish looking chart, and now they're extended. So this is a bullish looking chart right here. But while I talk about not all commodities are created equal, I mean, let's look at the silver miners. Like, this is still an ugly chart that I'm not getting involved in. I'll just be clear about that, right? You have a downtrend. So just because you have this inflationary word that's hovering over the markets and everything doesn't mean, gold and silver are just going to be the leaders. If you have an inflationary situation, you need to go look at energy, precious metals, base metals, agriculture, all these areas of commodities, and then pick the leaders out of that, because precious metals is looking weak. Energy is looking strong. Nat gas is looking parabolic. Okay. And by the way, I hope that you took some advice and bought some energy stocks, ETFs over the last couple of weeks, because I've been touting them, and then boom, they just absolutely catapult this morning and really break out. So I think, excuse me, need to. Had to clear my throat Monday morning. So I really believe that it's important to, at this point in time, to at least have a piece of energy. We don't know, if I go back to let's look at the XLE chart. Look, this is clearly breaking out. Maybe you can argue that it already did, broke out, came back, test the trend line. You got the re-break. I think it's important to have some energy. I'm not saying load up, back up the truck. If you want to wait for a pullback, that's fine. But, this is going on week 3 where energy is leading. You never know if this trend is going to roll over tomorrow, or you never know if you're going to have oil spike to 150 like it did in 2008. We don't know. We slowly enter. We have our stop loss. We have our automated profit booking strategies, and we just follow the rules. And that stock or that ETF is going to do whatever it's going to do. Okay. But if you don't own a piece early, early in the trend, like I've been talking the last couple of weeks, like this is, I believe, early in a trend, right? And it has the potential to buck the overall market trend. Then it's going to be harder. Then you start chasing. You get excited about stocks that are really moving up. It's going to get harder. So I think you kind of get my point on energy. Energy is leading. Base and precious metals, nat gas is leading energy. So it's just, I mean, it's really hard because nat gas is really extended. I mean, look at this right here. You have UNG, right? And then it's just absolutely taking off. This is, from 13 to 20. That's a really, really big move. I can't help but just to laugh every time, the government inflationary numbers come out and they say it's like 2% or something like that. That's just absolutely insane because everything else, including real estate, has just gone up a ton. The way they measure inflation, my opinion, is a joke. So anyways, so you have some really, really strong stuff. And one thing I did want to look at, so energy is leading, and the base metals, if I go to like BBB, just kind of the base metal ETF, this isn't a very strong ETF. Okay. But this is, steel, everything like that. But it did complete a weekly reversal pattern last week. Okay, so you have a breakout, a pullback, a weekly reversal pattern right at the 10-week moving average, right? So then COPX, that's not the one I wanted, but maybe I should just go back to DBB. But you had some base metals that are also really, really popping, and that's a pretty bullish pattern. So on this one, this is a more conservative ETF. But, if that breaks out, that wouldn't be a bad play. Look, you have accumulation that's really, really stepping in. So last Monday shook out everybody. Maybe it shakes out a lot of growth stocks, people today, but energy is looking pretty strong. And, last week's idea, Oasis, it's up quite a bit today. It's up. It was up 8% at one point in time and triple the average volume, and it's breaking out of a cup with handle pattern. So probably would have been better to try to get into some of this stuff last week when I was talking about it, starting to get a little bit extended. But at this point in time, if you don't have some energy, I don't know what more kind of signals you would be waiting on. So that's my case for energy, just owning something or just playing it or just keeping an eye on some of these stocks because they're definitely stronger than the overall market the last 2.5 weeks. And that's some of these trends can last a long time or, they can falter immediately. We don't know. So another thing I really, really wanted to talk about was interest rates. Let me pull up maybe a 10-year chart. Okay, so let me pull this up. We're going to look at this for a second. So this is the 10-year Treasury yield, right? Actually, we should probably do 30-year Treasury yield. Okay. So we have, let me look at this. Let me go back a few years. So you have interest rates, right? 30-year interest rates, and they are quite a bit off the bottom. But I think it's safe to say that interest rates broke out, right, of this first stage pattern right here and made a nice move. And that happened early in the year, and they've really, really pulled back. Well, now they're kind of at a point where this really got close to this breakout zone right in here. Okay, so a lot of times what was resistance, you can see it was resistance right here, resistance, breakout, pulls back, can turn into support. And it doesn't mean it's going to come back exactly to this box right here, but to me, this looks like a retracement, right? Just a pullback, and I would pay attention to the breakout. So when interest rates are positively correlated with banks. So right now you have banks that are popping pre-market because interest rates are popping. You have energy that's popping. So you have energy and banks that are starting to look a little strong, and they really have that outperformance type mentality if you get growth stocks and maybe just some other discretionary stocks really pull back. So I would really, really pay attention to this, right? Just to show you that if this breaks out, which I think it is, it looks reasonable that it is, then that's highly positive for banks. So let me go back to some bank ETFs, just to kind of show you what is really, really popping. You have the KRE right here. So let's look at this for a second. This is a regional bank ETF. Interest rates are popping. The market's getting hit. Let me look real quick what the market. So you have the market is down 1%. You have the banks and energy that's up, ETFs that are up 3+%. Clearly something is going on here. You have a breakout of a downtrend right there. You have a breakout of, resistance around the 67 area. It's clearing that level. You have a rise in the relative strength line. All signs are pointing to that this rally has a little bit of legs, or this kind of multi-day pop. And keep in mind that if interest rates rise, usually that's positively correlated with banks, because banks can make more money with higher interest rates. So if interest rates, let me go over to the bonds. Go to the TLT bonds. So this right here, you can see this bond ETF, it's also starting to break down a little bit. It hasn't completely broke down, but that's just going to show you, because bonds and interest rates have an inverse relationship. So if bonds fall, that means interest rates are rising. If interest rates are rising, that means that bonds are falling. So you can only look at so much evidence and then just make a judgment call. But looking at the evidence right here, right, you have interest rates that are rising, you have bonds that are falling. That relationship should happen. And you have banks that are rising because interest rates are rising. That relationship should happen. So if I go back to individual banks, right, or a bank ETF, this is looking pretty good. And I think now is and maybe this isn't the perfect time. Maybe it pulls back a few days and then does a rebreak, something like that. But energy, banks, if the market is just kind of chops around for a little bit or pulls back a little bit, I mean, I think the banks and the energy is where you want to be, is at least showing that it has that outperforming potential, instead of trying to buy, a bunch of growth stocks right now that really aren't doing that well. So this is where you want to look at. So you really want to find some banks, just go pick a bank. Like, we can just go look at Bank of America. And I mean, look at this. You have a boring Bank of America that is a mega cap. And that's about to hit an all-time high. All right, look at that. I mean, the breakout is there. So, and you can look at other, let me just see what the leader, Morgan Stanley. Actually, I want to stay right here. Look, Bank of America had a weekly reversal pattern last week. I bet the KRE had a weekly reversal pattern last week. Look at that. So you have more evidence, and then it's breaking above this level right here. So you have, a technical event being the weekly reversal pattern. You have a breakout. You have outperformance of the overall market. In my opinion, this is one of those scenarios like energy has been the last couple of weeks, where I was talking like, hey, if you want to put some money to work, look at some of this energy stuff. Now, so far, that's proven right. And I think banks right now is where you want to look at as well. If you added energy, now kind of look at banks. Now, sometimes those energy and banks can move together, but the banks are playing catch up, right? Have been in a pullback consolidation since the beginning of March. So to me, that's also what I like, because when I see something that has been consolidating for 6 months and now is all of a sudden starting to wake up, is starting to change personalities, right? It went from being in a consolidation to creating a weekly reversal pattern, breaking out. You have individual stocks breaking out. You have the relative strength line that's starting to rise. What more evidence do you need to say, hey, let's start looking at some bank ETFs. Let's start looking at some individual bank stocks because they have that outperformance mentality. So it's really what I wanted to just talk about today. I wanted to talk about energy is showing signs of outperformance as continued as it has. And I wanted to talk about banks because continue to be, which is highly correlated with interest rates, because we continue to be in this inflationary environment and interest rates are inflationary, energy, commodities are inflationary. So that's really what I would pay attention to this week is these two industries. But I think the lesson is don't get sucked into all commodities, right? Pay attention to precious metals. Until precious metals break out of a downtrend and show outperformance, I don't want to buy the weakest commodity. I want to buy the strongest commodity. So that's really my lesson of the day. I think I got that and pretty good, and open for questions or open for tickers. Or Ben, if you got anything.
No, you did have a lot to say on it. I was going to recap on tickers that you like in particular, in case somebody's wanting to place trade. KRE, like from the energy in the bank.
Yeah, I mean, so KRAE, I think is a good bank ETF, right? Mm-hmm. That's just kind of the benchmark right here. There is more aggressive stuff out there. I don't have any individual bank tickers at the moment, to be honest with you, because last week I was looking at all energy. And then when banks really started popping this morning, I was like, hey, I'm going to go through probably 100 charts today and try to find some decent banks. So, but yeah, a more conservative play would be the KRE because it did complete a weekly reversal pattern last week. Individual tickers, a lot of the individual tickers, if you haven't bought energy, honestly, are starting to get extended because FCG, that to me is extended. If you would have bought it last Friday, you'd have been fine. Now it's starting to get away from you. FCG is starting to get extended. IEO, which I owned and booked some profits on it this morning as it hit 8%. That's getting extended. So I think with energy, if you're looking to put some money to work and you haven't looked at energy or banks, I'd say let energy pull back a little bit because it will, right? It might pop for several days and get up here, and then it'll kind of ease a little bit. Let that ease happen. I think banks are probably a couple days earlier in the trend than the energy is. So I would start with KRE and then kind of work my way out on individual stocks. And like I said, if you're looking for ideas in banks, you can always just Google this fact sheet, see what they have in it. I haven't gone through as many banking charts as I wanted to, and I will today.
Gotcha. Kevin asking if we went the options route on a bank ETF, how many days out would you buy a call? Probably a better question for Greg, but I guarantee he would say 30 plus.
Yeah. Minimum of 30.
KO.
Coca-Cola. Is that Coca-Cola? Yeah, so I mean, I just think there's better stuff out there right now. Like it's the chart is fine, but look at all the distribution in the chart recently. It is at support at the 200-day moving average, but right now, as of today, as of this morning, I like banks and energy, and I just think that they are bucking the trend. So why not buy the strongest instead of working on some of the weakest stuff? So not a bad chart, but if you're putting new money to work, I'd focus on what's stronger.
Any other tickers? Somebody's got a ticker. It's Monday morning. Kevin, I know you probably have a ticker.
I need some more coffee.
Me too.
So let's go, kind of while we're waiting on that, we got a few minutes. We'll just kind of go to this ETF list and see what is in the top of the day so far. So always look at okay, what's the weakest, right? The weakest is technology, IPOs, technology, growth stocks, cybersecurity. So growth stocks are getting hit hard. Nat gas is once again at the top of the list. You got nat gas, this uranium. I don't know what's going on with uranium, but this might not be a bad entry right here because you had something that went up 30% and it's pulled all the way back. Now, that could be scary, right? But I mean, that's right at support. So you could easily enter in uranium, right, with a tight stop. I probably, or if you wanted the more conservative route, you can see if it pops a little bit more. But we've talked about the uranium over the last few weeks, and it has pulled back significantly. And you can see IEO. All right, and IEO is a little thinner ETF, but the reason I bought it is because it has some more aggressive energy names in it. So, and it's up a lot. And you do have some silver miners, right? You have some miners, some metals and miners that are in the top 10 this week. But again, if you have your choice of buying something, why not buy the strongest instead of buying, the weakest? Banks are also up here. Yeah. So the KRE is really popping. Oil is breaking out. And I haven't read any fundamental news on why oil breaks out. I usually don't, because then that gives me an opinion. I don't want to have an opinion because everything's already on the chart. Right? If it's going to go up, all that news out there, if something's going to go up, it'll go up. Like, why try to focus on OPEC and all that bull crap? Because, I mean, it's just a guessing game. All information is already on the chart. Makes it so easy. Okay, so IBM. Yeah, so this is kind of the same thing with Coca-Cola. It's not. IBM is kind of past its growth days, but it did complete a weekly reversal pattern last week at the long-term moving average. So I would say if you really like IBM, now wouldn't be a bad time because it found support at the 40-week. It had a weekly reversal pattern last week. Wouldn't be a bad place to enter. Again, I want something that's going to move a lot more personally. I want the fast movers. And there is no free lunch with fast movers. Sometimes you have to take the volatility that goes along with it. Yeah, this is silver. This isn't for me. It's in a downtrend. It's just like the silver miners I talked about. It's in a downtrend. If it's going to be a truly great investment, something truly great, then it should outperform all its other commodity counterparts, and it should have a good-looking chart, and it's not. It's just in a downtrend channel. I don't want to catch a falling knife. I'd focus on energy and even base metals. I think XME, it looks a lot better than the silver miners, right? It's bouncing off the long-term moving average where the silver miners is under it. But again, even this is just sideways, 100% sideways action. Energy, nat gas, uptrend. Maybe silver miners will catch up. Maybe they will. But PBA. So what is this? Pipeline and MLP, 6%. Yeah, I mean, this is an okay chart, but it hasn't gone anywhere. It's the same price it was really back at the end of April. It's the same price it was back at the end of April. So, 5 months approximately? It has gone nowhere. It is starting to outperform. So with something like this, let me see if it completed a reversal. I think it did barely complete a reversal last week. So it could outperform. Okay, I might need to see a little bit more than one up day. If it probably pops tomorrow, I'd say, yeah, that's looking like it's going to head for an all-time high. But it hasn't shown me enough that it wants to get out of this sideways action. I'd give it personally one more day to look at it. We're right at 30 minutes, I think. We got one more, or else we'll just kind of call it for the week.
For the day, we got a show on Wednesday.
That's what I said. Call it for the day.
Aye, that's right. Any other tickers? No more?
Summary, energy and banks, really focus on them. If you want something to do, something to look for the week, just go find a list of banks and start going through them. I think, if interest rates just really start to take off, I think wait for the energy pullback. And yeah, so I mean, this chart it's in my opinion long gone. So if you got it anywhere down here, congrats. But I can't chase this, because if it's up 20% in a day, I mean, I'm using 8 to 10% stop losses. I'll get stopped out in an hour. So usually when I enter something, I want to buy something as close to support as possible, or something that I don't think my stop loss is getting picked off. And great looking chart if you already own it. If you don't own it, if you want to buy it, just use a stop loss. Just use a stop loss. And if you get stopped out, you get stopped out. All right, now we're getting a bunch of tickers, so I'll try to go.
There's that delay between our stream and YouTube.
Okay. So I don't know what this is. BBIG. It just kind of looks like a penny stock a little bit. I don't know anything about it. This is a little too volatile for me. It is pulling back. In my opinion, I'd try to see, it's bouncing. I'd try to see if it comes back a little bit, buy it as close to the 50-day moving average as possible. And that's one of those, if I can't use a stop loss, then NVIDIA, which I do still own because it's holding the 50-day moving average at the moment. It still looks pretty good. The industry doesn't. So as far as putting new money to work, I'd probably focus on banks. But as far as if you still own this, I'd hold it until it breaks, because it could just go sideways for a while. If it breaks, it breaks. Yeah, a lot of the FANG stocks aren't looking so good. Amazon, it tried to break out and it's back down. The chart does not look good, in my opinion. It is in a consolidation that has been going all the way back since July. It's the same price it was since July. Look at that relative strength line. It's been underperforming, or excuse me, that's probably June of 2020. It's been underperforming for a long time. So I probably wouldn't buy it at this point in time, but if you don't have to sell it, if you own it, you just have to understand that it's gone nowhere for a long time. And it's showing like it doesn't want to go anywhere either. Tesla. So it's funny. Let's kind of go back. It made such a monster move, right? Such a monster move. I don't even know what 1,000% move this is, but it made a monster move. And I know it's coming up close to resistance, and there is some accumulation right here. Don't be surprised if, like, it's been going sideways all year, really since January. Don't be surprised if this goes sideways for longer, like months and months longer. Because when you have a monster move, just like Amazon, you saw the chart of Amazon, sometimes they just take those gains have to digest, right? The stock has to take a pause, just like the market has to take a pause, or a correction, or a bear market, or a pullback. And sometimes those pauses can go longer. So I would just say with Tesla, will probably lower your expectations. Now, if it starts to really kind of get out of here, that's completely different. My opinion would change, but I wouldn't be surprised if it continues to consolidate for a longer time. And it's kind of just slowly grinding higher. And when I kind of see a slow grind higher, I tend to think it's going to do this. It might do this before it does this. Just a nice little shakeout, just to scare the bejesus out of everybody.
Okay. I don't think we have any more tickers I see.
Okay.
Wednesday, we've got options with Greg, 9 a.m. Central. And anybody that's not subscribed to the channel can do so below. Steve, you got anything to add to that?
No, just, if, like I said, Ben said, subscribe to the channel below. We would appreciate it. Like the YouTube channel, we would appreciate it. That way we can, help. It will help more people find us. And I hope everybody has a great week. Take it day by day. Whatever the market does, it's totally fine. We've been in an uptrend for a while. So just take it day by day and have a good week.
All right. Thanks, everybody.